Hello guys, welcome back to our YouTube channel Kelazales Tabza Tabisoranzi. So guys, in today we are going to take a look at final accounts and financial statements, guys, whereby we will be completing our trading account as well as our profit and loss. So already we have our provided structure for trading account as well as our profit and loss account. So now let's take a look at this activity. Activity 1. The information provided is extracted from the records of Mokoshua traders. You are expected to prepare the following accounts for the financial year ended 28 February, guys. So as we know, our culture, guys, will always show our timeline. Then it will be February 2020. Our financial year ends when February 2020, meaning it started when March 2019, and then it will be April, May, June, July, August, September, October, November, December, January. Then it's our 12 months period, and then we are required to complete trading account as well as profit and loss. So guys, let's get to it immediately. So, and then guys, as you know that we have our first step, which is a pre-adjustment trial balance. It's our step 1. So whenever we do a trading account, then this is the structure of trading account. We have debit as well as the credit side, and then our credit side under trading account, it will be shown by a positive sign, while the debit side is shown by a negative sign. And then under our credit side, we have sales. We have sales under our credit side. We have sales, and then under our debit side, we have cost of sales, and then we have lastly gross profit. So guys, and this is our structure. Wherever you go, if ever you are required to complete trading account, then you need to know that this is your structure based on trading account. So guys, let's complete it. The credit side, under credit side, guys, as we have said that we have sales, then sales will subtract debtors allowance. Debtors allowance. So sales from our pre-adjustment trial balance, we find out that the sales amount is 1 million. The sales amount is 1,267,000, and then we'll do our small bracket there and write our 1,267,000. $1,267,000, and then subtract debtors allowance, and there we go. This is our debtors allowance, and then of how much? Of 15,800, and then subtract 15,800, and then guys, we go for our cost of sales. Under cost of sales, again, we find out from our pre-adjustment trial balance, we have 597,000, and then we are going to record it under our trading account as how much? 597,000. And then guys, we are going to add our sales, whereby we are going to say 1,267,000 subtract 15,800, which is subtracting debtors allowance, and then we have how much? We have 1,251,200, And then now in this case, guys, we recorded our sales. We also recorded our cost of sales. Now we have to look for the bigger side. So obviously, guys, the bigger side is our credit side. With how much? With 1,251,200. What you did on your left must also be made on your what? On your right. 1,251,200. And then now we need to record our profit and loss. So now we are going to say 1,251,200 subtract our 597,000, and then the difference is our gross profit. Sales minus cost of sales equals to what? Gross profit of how much? Of six. Can I just change a pen, guys? Of how much? Of 654,200. And then, guys, immediately without wasting time, we are going to take our gross profit and immediately take it to our what? To our profit and loss account, and then written as what? As trading account of how much? 654,200. And then, guys, we are done with our trading account. So now we can be able to go to our profit and loss account. We can now complete our profit and loss account. Profit and loss account, guys, it's nothing else but is a ledger in which will show us all the incomes of the business as well as the expenses of the business. So now what I did, guys, I just went to my pre-adjustment trial balance and took all my incomes, such as interest on fixed deposit was recorded, rent income was recorded, as well as commission income under my credit side. As my credit side, it's all about incomes, guys. All the incomes of the business. It's positive, while the expenses will be illustrated by a negative sign. And then under my debit side, which is expenses, I collected all my expenses, guys, such as bad debts, advertising, insurance, salaries and wages, water and electricity, telephone, sundry expense, consumable stores, and bank charges, and they were recorded under our sundry under our expenses, which is the debit side of our profit and loss. So now, guys, we are done with our pre-adjustment trial balance. The most important thing, again, guys, whenever we complete the profit and loss account, meaning we need to look at the nominal section as the whole. We need to look at our nominal section. Only the nominal section. Meaning nominal section, it's it's incomes as well as expenses. So these ones, they will go to our profit and loss account. So now, guys, we can go to step number 2, which is our adjustments. So step number 1, it's completed, guys, whereby we take a look at our pre-adjustment trial balance, and then now we can be able to go to our step number 2, which is adjustment. Step number 2. So, guys, let's start with the first adjustment. First adjustment says Bokhashua, a debtor. So now we are speaking about a debtor now who owes 900. This debtor owes how much? 900, and was declared insolvent on the 28th February 2020. His estate paid 45 cents of the rand, of the 1 rand, and then the balance must be written off as a what? As a bad debt. So guys, in this case, guys, you know our calculations they are as follows, meaning that 900 is equals to what? It's equals to 1 rand, and then the amount of x, it's what we don't have, which was must be what? Written off, which is what? 0.55 cent, since the what? The debtor paid only 45 cents. So the difference is what? Is 0.55 cents, and then we can do our cross multiplication. Then now we can do our cross multiplication, whereby we are going to say 900 multiplied by 0.55 cents, and then we have how much? We have 495 rand equals to, and then 1 rand multiplied by our x, then we have how much? We have 1x, and then divided by 1. What you do on your left must also happen in your right, and then 1 will cancel 1, and then our x will be equals to 495. So guys, then now we are going to write off how much? 4195. So guys, and I always tell you that learn to play with calculations around. Maybe again we can say the debtor owes us how much? 100%, but out of this 100% he only paid 45%, meaning the rest must be written off, which is how much? 55%, while not forgetting that 100% is equals to 900, and then 45 it's unknown, it's x, and then 55 it's unknown. And then we can use the known or unknown method, whereby we're going to say what we have multiply by what we don't have. What you don't have is what? 55. We are looking for 55%, divided by 100, in which is what we have, and then equals to how much? 495, and it must be written off. So guys, and since we are able to calculate how much must be written off, so now let's record. And then under bad debts, we are going to say under bad debts, it's a pity that, guys, and I don't have enough space under my profit and loss, but whenever you're completing profit and loss, guys, please show brackets, as I did under trading account, whereby I said sales, and then underneath sales I showed the opening balance, and then subtracted what? The debtors allowance, my calculations. So what I'm trying to say is that please show calculations under your profit and loss, so that whenever maybe you made a mistake, maybe you typed a wrong amount in your calculator, then it teacher or whoever will be marking you will be able to see that there was a mistake. So it's a pity because of I don't have enough space, then I will just do my recordings in my blank space there. So since now we are talking about bad debts, then we are going to write bad debts. So under bad debts, I'm going to have my opening balance from my pre-adjustment trial balance. It's my step number 1. So from the pre-adjustment trial balance, my bad debt, it's how much? It's 5,900. Then I'm going to take my 5,900 plus the amount that needs to be written off, because of now it's an expense. Our expenses will increase with 495, and then I'm going to write my 495 and close the bracket and calculate the amount that needs to be recorded under profit and loss. So 5,900 plus 495, then it's how much? It's equals to 6,395, and then take that amount, and then we record how much? 6,000 we record how much? 6,395 for what? For bad debts. And then guys, we can move to another transaction. So guys, it's very important guys to be able to play around with calculations, so that guys you understand we have different methods we can apply to calculate things. So just allow yourself to use different methods and understand what you are doing. And in order for you to understand what you are doing, you need to practice each and every day. Whenever you get time, you can just go back to your classwork books or anything, or download question papers and then study everything there. So guys, we can now move to transaction number 2. Transaction number 2 says rent for March has already been received, meaning now we are talking about rent income. So now we are going to have what? Rent income. Then I'm just going to write number 2 there. It's what? It's rent income. And then opening balance from my rent income, from my step number 1 pre-adjustment trial balance, it's how much? 52,000. And then I'm just going to do what? To record my 52,000. And then I have my 52,000. And then guys, since now we know that rent for March has already been received, then let's show our timeline. And then we have our what? Our timeline. And then we know that our financial year ends when? Feb 2020, meaning it started when? March 2019. And then we have April, May, June, July, August, September, October, November, December, as well as January. It's 12 months period. So now in this case guys, they are telling us that rent for March has already been what? Been received. And then guys, what you need to know is that our we stick within our financial year. So anything above our financial year must be what? Must be subtracted. So those things will be what? Will be prepaid expense or income received in advance. So now they told us that rent for March has already been what? Been received. And it's what? It's after our financial year, and anything above our financial year must be what? Must be subtracted, while anything within our financial year must be what? Must be shown by a positive sign. So now we know that we got paid in what? In advance. There's an income received in what? In advance. So this amount of money needs to be what? Subtracted. So now we know the sign that we need to use, and then we'll just go to our rent income and put our sign and say minus. So now we need to find out each and every month we were paying how much from the beginning of our financial year up to the end of our financial year, including this month of March, because of it has already been what? Been received. So from our pre-adjustment trial balance, we were given an amount of how much? 52,000, meaning this 52,000 is for a 13 month, which is 1 2 3 4 5 6 7 8 9 10 11 12 13. This amount is for how many months? It's for 13 months. And then we can say divided by 13 months, meaning we are looking how much are we earning each and every month. So we are going to say 52,000 divided by 13. Then the answer is how much? 4,000, meaning each and every month we receive 4,000 for rent from our tenants. We receive 4,000, meaning now we need to subtract this month. Then we'll go to our rent income and then say 4,000 must go back to what? To the tenant, and then we'll get it in the next coming financial year. And then 52,000 subtract 4,000, and then in our financial statement we are going to record how much? 48 48,000. And then guys, we can take this amount of 48,000 and record it as under what? Incomes, under profit and loss, as what? Incomes of how much? 48,000. And guys, I hope that you understand, guys. Please guys, make sure that you understand these transactions. If ever you don't understand, rewind and make sure that you make sure that you understand. And then guys, it's very, very important to know your financial when does your financial year ends, and anything that is beyond your financial year needs to be what? Needs to be subtracted, and anything that is less than your financial year or in between your financial year, then it needs to be what? Added. And then anything that is within our financial year, it's called what? Accrued. We have accrued expense and accrued income, and then they will be determined by a positive sign. And then anything above our financial year or more than our financial year, such as prepaid expense, income received in advance, then they need to be what? Subtracted. So guys, without wasting any time, let's take a look at what adjustment number 3. It says on the 1st of January 2020, an amount of 960 was paid for placement of weekly advertisement for a 3-month period. Meaning again guys, we need to have what? Our timeline. Our timeline will guide us on what is happening in this transaction. So our timeline, I will just draw my timeline again here. And then our financial year ends when? February 2020, meaning it started when? March 2019. It's March, April, May, June, July, August, September, October, November, December, January. And then guys, they are telling us that on the 1st of January we have the 1st of what? We have the 1st of January 2020, which is here, which is what? This point, the 1st of January. And then the amount of how much? The amount of 960 was what? Was paid, meaning we paid. It's an expense. And then for how many months? For a 3-month period, meaning it will be what? 1st of January is the first month, second month is February, which is what? The end of our financial year. And then the third month, it's what? It's March, meaning it's beyond our financial year. As we said that anything beyond our financial year, anything beyond our financial year needs to be what? Needs to be what? Subtracted. So now we can what? Go and write our advertisement. And then number 3, transaction number 3, we have advertising. And then the opening balance from our first step, which is pre-adjustment trial balance, advertising, it's given as how much? 5,200. And then we are going to record our 5,200, and then now we can show our sign. We can do what? We can show our sign, the negative sign, that anything that is beyond our financial year then needs to be what? Needs to be subtracted. And then how much are we subtracting? Since that we paid how much? 960 rand, then it was for how many months? For 3 months. Then each and every month we were paying how much? From January, February, March, each and every month we were paying how much? And then we're going to say 960 rand divided by 3 months, and then each and every month we were paying 320 rand. We are paying 320 rand. Then we don't need the month of March, then meaning we are going to subtract how much? Under advertisement we are going to subtract 320 rand, and then our final amount for advertisement will be what? 5,200 minus 320, then the final amount is 4,880 rand. And then now we can record it under our profit and loss account, 4,880 rand. So guys, it is very important again to understand the information and always have our timeline. Our timeline help us a lot, guys, in order to what, to understand these things and also to be able to solve these given problems. And then, guys, let's take a look at our transaction number 4. Transaction number 4, it says the monthly insurance. So now we are talking about the monthly insurance. The monthly insurance premium of 750 has been paid 1 month in advance. Has been paid 1 month in advance. Meaning, guys, we paid 750 1 month in advance. Meaning, whenever we show our timeline, it will be February 2020, the end of our financial year, as well as March, the beginning, which 2019, and then it was paid 1 month in advance, which is what, March. Meaning anything beyond our financial year, then it must be illustrated with what, with a minus sign, with a negative sign. And then we can go and look for insurance amount from our pre-adjustment trial balance, which is how much, 8,700. And then we can write the number 4. We have what, insurance, and then the opening amount is 8,700, and then our sign, which is subtraction, minus how much, 750, as it was what, minus 700 and then subtract our what, our 750 rand. And then now we can say what the amount for insurance at the end of the financial year, it's what, it's 8,700, subtract 750, then the amount that we have for our financial year is 7,950, and then we can go under insurance and record 7,900 and what, and 50 rands. So, guys, it becomes easier, guys, to solve these problems, guys, if ever you practice. Whenever you get time, guys, and please make sure that you practice, and then practice obviously makes perfect. And then, guys, and let's take a look at transaction number 5. It says an employee, M. Madiki, was underpaid, meaning we paid less, and anything that is less must be shown by a positive sign. Those are regarded as what, as accrued. We paid less, meaning we need to add. For when? For February 2020 in error, the difference of how much, 2,500, will be paid in March. Then, guys, we need to illustrate that there is still an accrued income in our financial year, and then it's for what, it's salaries and wages. And then salaries and wages, we can what, write transaction number 5, then transaction number 5, which is what, salaries and wages. And then our opening balance from our trial balance, it's how much, is 247,000. Then we are going to write how much here, 247,000. Because of we underpaid, then we need to add. And then what difference, the difference has been given to how much, 2,500. And then we're going to say plus 2,500, and then we close. And then the whole amount for salaries and wages will be how much, 247,000 subtract 2,500, and then we have how much, not subtract, we are adding 247,000 plus 2,500 because of it was underpaid. And then at the end of the financial year, our salaries and wages, there will be what, 249,500. And then we'll go to our a profit and loss account and record 249,500. So guys, just know that if ever we overpaid, then it was going to be subtracted, but in this case we did what? We underpaid, then we need to pay more. So guys, let's take a look at our transaction number 6. It's as follows. Transaction number 6. The interest on fixed deposit has been received 3 months in advance. For how much? 2,400. So guys, same thing, our timeline is as follows. It ends when? February, meaning it started March. February 2020, meaning it started when? March 2021. So now they are telling us that interest on fixed deposit has been received 3 months in advance, meaning it was what? Above our financial year. It's above our financial year, meaning 3 months in advance. It was 3 months in advance. It was March, April, as well as May, meaning all these months they need to be what? Subtracted. And anything guys that is beyond our financial year, then it needs to be what? Subtracted, because of it's what? It's either prepaid expense or income received in advance. Because of now, since this money is receivable guys to us, then we need to subtract how much? 2,400. And then we'll come to our what you call and then we'll write transaction number 6 here. Transaction number 6 is what? It's interest on fixed deposit. And then the opening balance from our pre-adjustment trial balance guys, it's how much? Interest on fixed deposit, it's how much? It's 12,000 from our pre-adjustment trial balance. Then now we are going to do what? Open bracket and write our opening balance of how much? 12,000. And now they told us that 2,400 was received in advance for 3 months, and then we are going to what? To show our sign, as we said that anything beyond our financial year must be shown by a negative sign. Then we are going to what? To include our sign and say subtract how much? 2,400. And then guys, the interest that will be recorded in our financial year at the end of the year, it will be how much? We'll say 12,000. We'll say 12,000 subtract 2,400, and then we have the different. We have the how much? We have 9,600. We have 9,600. So now, since we know guys that interest on fixed deposit is an income, it will be recorded under what? Under our profit and loss, under credit side, because of it's a what? It's an income. And then it's how much are we recording? 9,600. And then guys, you just need to understand these things guys. Whenever you receive money in advance, then it's subtraction. And then how much are you subtracting? And then if ever you paid in advance, then it's prepaid expense. Then you need to subtract. How much are you subtracting for how many months? Yes. So guys, it's very, very, very important guys to practice. Whenever you get chance guys, please don't waste your time. Please make sure that you practice guys. And then guys, without wasting any time, let's go to transaction number 7. Transaction number 7 says, internal auditor found that bank charges, meaning now we are talking about the what? The bank charges. And then 500 has been incorrectly debited in the sundry account expenses. Guys, I really like this kind of transaction. So guys, right now, so what happened in this transaction? So what happened is that the auditor found out that under bank charges. So bank charges, guys, are regarded as owner's equity, and then their expense account, they will increase on the debit side, decrease on the credit side. And then the auditor found out that bank charges of 500 has been incorrectly debited under what? Under sundry expense account. It's also what? An owner's equity expense account will increase under your debit side, decrease under what? Your credit side. So in this case, guys, they are telling that 500 was not supposed to be what? Recorded under sundry account. It was supposed to go to bank charges. So that is the scenario. This is what happened during the what? This is what happened during. So guys, so what needs to happen? We need to correct the error. So how are we going to correct the error? Then we need to what? We need to take out this 500, and whenever we take out this 500, then it must be what? Credited. Then positive will be subtracted by a negative, and then we're going to say 500, and then this 500 will be cancelled by this 500. One account credited, meaning our bank account will be what? Bank charges will be what? Will be debited, meaning this is what we really needed at the end. So guys, in under sundry, so this is what happened, meaning we added what? We added bank charges while we subtracted under sundry expense. So guys, let's record this thing as it is what? As it is required. So what we are going to do, we are going to write transaction number what? Number 7. We are going to say number 7, what happened? We have what? Bank charges, as well as again the opening balance of bank charges will be illustrated, and then we also have what? Sundry expenses. And then let's go back to our step 1 pre-adjustment trial balance and find out how much is our opening balances for bank charges. It's 4,050, and then we record. It's how much? 4,050. While our sundry expense, it's how much? It's 13,000. And then we are going to write the opening balance of sundry expense, 13,000. So guys, so now it was wrongly debited in the sundry account. Then we need to subtract that 500 and then add it to the correct account, and then we close off. And then guys, for bank charges, we'll say 4,050 plus 500, and then equals to how much? Equals to 4,550. And then we go to our bank charges under profit and loss. We record how much are we recording? 4,550. And then going to do the same thing under our sundry expense account. And then we are going to say 13,500 minus 500, then we are left with how much? 13,000. And then we're going to go to sundry expense and write how much? 13,000. And then guys, in this are one of the interesting transactions that we need to take to mind, guys, and enjoy them. And then guys, let's take a look at transaction number 8. So transaction number 8, it says consumable stores unused. And then guys, based on the information that we have, we know that consumable stores that are unused, they are what? They are regarded on what? On hand. We call them what? Consumable stores on hand, or the stock taking at the end of the financial year, and they must be converted to what? To an asset. We are going to use them in the next coming financial year. So on hand of how much at the end of the financial year are valued to what? To 1,000. So we are going to what? To write transaction number 8, which is what? Consumables stores on hand. And then the opening balance, it's what? It's 6,500. 6,400. So out of 6,400, we only have the unused, which is how much? It's 1,000. The unused, it's 1,000. We didn't use 1,000, meaning in order for us to be able to record consumable stores under profit and loss account, we need to see, or we need to calculate how much consumables did we use during the year, and those used consumables during the year, they are regarded as expenses. Then we are going to say subtract 1,000. We are just looking for a difference, and then we are going to say 6,400 minus 1,000, then it's how much? 5,400, meaning 5,400 is the used. Then this one, it's what? It's an expense to the business. Then we will be shown under what? Consumable stores. That's how much? 5,400. So guys, in these things, guys, they just need you to understand and be willing to go back. And then guys, we have again transaction number 9. We have transaction number 9. It says provide depreciation on vehicle at 20% per annum on the diminishing balance method, as well as the equipment on 10% on straight line method. So guys, we have been doing depreciations, and we know how to calculate what? Depreciations. And then guys, let's write here transaction number 9. It will be what? It will be it's going to be depreciation. And then guys, let's and then we can go to our pre-adjustment trial balance. They did not give us depreciation, meaning we need to calculate what you call depreciation. So guys, let's calculate depreciation. So now we are going to have depreciation for what? For a vehicle, and it needs to be calculated at what rate? 20%. Then we are going to show 20% on what? On the diminishing balance method. This one is diminishing balance method, while equipment, it will be calculated at what rate? At 10% on the straight line method. Then it's going to be what? 10% on cost. By the way, straight line, it's what? It's on cost. It's cost price. So guys, let's start. The vehicle at the beginning of the year, it's how much? Then we can go to our vehicle from our pre-adjustment trial balance under balance sheet section account. We have a what? Vehicle of how much? 410,000. And then we are going to what? To record the vehicle, we are going to say how much? 410,000. And then we are calculating which method? Diminishing balance method. And then guys, diminishing balance method, it's cost minus accumulated depreciation, and then equals to what? Carrying value. And then we can what? Multiply by our percent, and then multiply by months. And then guys, now we have our cost. Then now we need to what? To subtract our accumulated depreciation. And then we are going to our pre-adjustment trial balance. We have been provided with accumulated depreciation of on the vehicle, which is how much? 160,000. And then subtract how much? 160,000. And then equals to our what? Our carrying value. And then let's see, 410,000 minus 160,000, and then equals to 250,000. 250,000 multiplied by our rate, which is 20 divided by 100 multiplied by this vehicle. It's in the business for how many months? For the entire of our financial year, meaning starting from March up to 28, as they told us that we need to calculate depreciation on when? On the 28th. We need to calculate depreciation on the 28th of February. So it's from March up to February. Then it's how many months? It's 12 over 12. It's 12 over 12. And then our depreciation for vehicle, it's equals to how much? And then we are going to say 250,000 multiplied by 20 divided by 100 multiplied by 12 divided by 12. And then 250,000 multiplied by 20 divided by 250,000 multiplied by 20 divided by 100 multiplied by 12 divided by 12. 250,000 multiplied by 20 divided by 100 multiplied by 12 divided by 12. And then our depreciation for vehicle is how much? It's 50,000. And then now we can go to our depreciation there and write that for the entire year for vehicle we have depreciation of 50,000. So now guys, and let's calculate depreciation on equipment on what? On the straight line method, as they told us, on straight line method, which is what? The cost on cost. This one is the easiest one. And then we can go to our pre-adjustment trial balance and find out at the beginning of the year how much equipment are we having. We are having 207,000 equipment in the business, and then it's straightforward. There is no need for us to minus accumulated depreciation, as they say it's straight line method. It's on what? Cost. Then we are just going to say 207,000 multiplied by our percent, which is 10 over 100. And then this equipment is going to stay in the business for how many months? For 12 months period, as they are saying. We need to calculate until the end of our financial year, and then multiply by 12 over 12, multiply by 12 over 12. And then depreciation for equipment, it's how much? 207,000 multiplied by 10 divided by 100 multiplied by 12 divided by 12. And then our depreciation for equipment, it's 20,700, and then we are going to add 20,700. And then the depreciation for the entire year, it's how much? It's what? 50,000 plus 20,700. Then our depreciation for the entire year, that will be recorded under profit and loss, it's 70,700. And then we can go now to our profit and loss account and write depreciation. And then how much is it? 70,700. So guys, in this thing, it only takes practice, guys. It only takes practice, guys. And if ever you practice depreciation, then you are going to kill it. Just know that diminishing balance method, it's what? It's a cost minus accumulated depreciation, and then equals to your carrying value, and then multiply by the given percentage, multiply by the months, and then you have your what? Your depreciation. Go back to my videos whereby I spoke about depreciation and study and practice them, guys. And then we also have another method, which is what? Straight line method, or on cost, whereby you are only going to what? To use your cost price only, multiply by the percentage, multiply by the months. And then guys, then let's take a look at our final adjustment. It says a physical stock count on the 28th February revealed an amount of how much? 55,000. So guys, now we are talking about trading stock. So meaning in mind, you know guys, that it's either we have trading stock deficit or trading stock surplus. So let's get into the business. So guys, in transaction number 10, and then let's write stock. let's write stock, and then we'll find out if ever it's a surplus or it's a what, it's a deficit. So what is our opening balance at the beginning of the financial year? So we are going to go for trading stock. We have 55,690. Our physical stock count at the beginning of the year, it's how much? It's 55,690. And then basis subtract the stock count at the end of the financial year. The stock count on the 28th of February, it says that we have 55,000. Then let's look for a difference, meaning our stock count, it's more than the given stock count, meaning it's a deficit, guys. In as a business, we are losing. It's a deficit. But if ever our physical stock count was less than their physical count, then it was going to be a surplus. But in this case, our physical stock count, it's more than the given physical stock count. Then, guys, we are having a trading stock deficit of how much? 55,690 minus 55,000. Then we have a deficit of 690. And then we are going to write stock what under our profit and loss. You're going to write what? Stock deficit of how much? 690. And then, guys, in this case, guys, in our transactions, guys, they end here. And then what we didn't speak about, let's just make sure that, guys, we wrote everything in our in our pre-adjustment trial balance, and then anything that was not spoken of, we can just include it. And then we spoke, let me just do this. And then, guys, we spoke about sales from our trading account, cost of sales, debtors allowance, and then bad debts, interest on fixed deposit, as well as rent income, advertisement, insurance, wages, and then water and electricity. We did not speak about it, and then there was no transaction about it, meaning we are just going to write it as it is, 27,400. And then commission income, and then we didn't speak about it, which is how much? 24,000. And then it's what? 24,000. And then telephone, we did not speak about telephone, so now we are just going to include it as it is, 3,800. And then we spoke about sundry expenses, consumables, as well as bank charges. So now, guys, we can close our profit and loss account by determining the bigger side. So obviously the bigger side is our credit side. We are going to send 654,200 plus 9,600 plus 48,000 plus 24,000. And then our credit side is bigger. Our credit side will be bigger and by 735,800. What you did on your right must also be made on your left. And then, guys, now we are going to balance the debit side by saying what? We have the capital account, which is what? It's capital. Then it's our net profit. This is our net profit, meaning our incomes are more than our expenses. Our incomes are more than our expenses. Then we're going to write capital. It's a net profit. This is the profit we generated. And then 735,800 minus 690 minus 70,700 minus 45,500 minus 5,400 minus 13,000 minus 3,800 minus 240 70. And then guys, let's redo it again. 735,800 minus 690 minus 70,700 minus 4,550 minus 5,400 minus 13,000 minus 3,800 minus 274,000 minus 27,400 and then minus 249,500 minus 7,950 minus 4,880 minus 6,395, and then the difference that we have, guys, in it's 341,535. So guys, and it's very important to double check your calculations so that you avoid making mistakes. So guys, and this is our complete trading account and our profit and loss while we were following all our steps and also doing our calculations. So guys, in if ever you don't understand, you need to rewind and make sure, guys, in you subscribe while you study, you like while you start, you press that notification button while you start so that you can be notified whenever I upload the banks. So guys, it's a bang.